And we have here right now to break it all down for us, Payne Capital Management Senior Wealth Advisor Courtney Dominguez and Kingsview Wealth Management CIO and Fox Business contributor Scott Martin. Good to see both of you.
Thanks for having us.
Scott, I want to start with you. These stimulus checks, whether it's $600 or let's say $2,000 in a Biden administration, is it targeted enough for what the country and the economy needs right now?
For the next week, maybe, and then things get bad again, and then we need more. I mean, that's really what I think you have to be aware of, I guess, as an investor, certainly as a trader these days, Lauren, that we are as investors for our clients' money is like, the stimulus is going to come. I mean, whether it comes in the next week or two and it's timely is anybody's guess, but the markets have already baked this in. And that's why the markets, I think the S&P, especially as you noted in the jump there, fell about 20 points in the fact we might have a delay in the payments because the stimulus is out there. It's basically already in stock prices. So, yes, that will fix some of the problems near term, but don't get me wrong. I mean, I think once the Biden administration gets in and gets fully entrenched in D.C., there's probably another stimulus package behind this one that the market's going to eventually count on as well.
So, yeah, it's all about the timing. That's interesting. So you say the stimulus, no matter what the size, is baked in along with all this vaccine news, and we're seeing some weakness today. When you look, Courtney, at the red on the screen, what do you think it's all about? I took particular attention to the Russell 2000. These are the small caps, right? They've been left out for the past 3 days of this record run that the major averages are enjoying. What does that tell you?
Yeah, and I think you also have to look at this in a bigger picture because over the last month or two here, your small caps was actually way outperformed as you're starting to see this rotation from those big companies into the smaller companies as we look out to next year. Because if we are under the assumption that the economy is going to recover, and that is kind of the general consensus right now, your small caps are some of the most sensitive to those. So yes, especially as we see the stimulus, you're going to get some ups and downs here. It is pretty normal. But we want to focus more on the longer term, and especially with the vaccine is probably more pertinent right now, which they're thinking there's going to be about 100 million Americans who have the vaccine by March, and the economy can be reopened by the summer. If you think of that and all the spending power that's going to come mid to late next year, that's what we really want to be focusing on. Your small caps can actually be one of your big beneficiaries of that.
Yeah, Scott, that's interesting now. So arguably, you could buy the dip on the Russell 2000, and you're hopeful, Courtney, that the vaccine reopens the market. But Scott, we hear from Joe Biden today, and he's criticizing the Trump administration's rollout of the vaccine. Only 2 million Americans have gotten the shot. They want 20 million by the end of the year. What are your thoughts on that from a market perspective?
Really odd to hear Biden criticizing Trump and vice versa. I mean, my goodness. Well, it's not a surprise to hear that, I guess, and I agree. I mean, I guess it's been kind of slow, but it was a pretty amazing kind of solvent that we got done here for the vaccine and for the disease, so that's good. With respect to the small caps, and it's an interesting one, Courtney's right, the catch-up trade in small caps has been really amazing. It's been actually striking in the last few months. But here's the fly in the ointment, or the soup, to give a shout-out to restaurants these days, is that, Lauren, I think we're going to see a higher interest rate environment going forward with all the money that's sloshing around here, whether it's from the Fed or from the Treasury Department. And so as you see higher interest rates going forward into 2021, maybe pressuring the housing market a little bit, which you talked about briefly a few seconds ago, as well as maybe pressuring some of those growth stocks too, that's an environment as well I think the market is not quite digesting yet, to stay in that soup theme that we have to think about as investors going into the new year.
And let me reintroduce another theme. You said higher interest rates. Well, the higher theme, what about higher taxes? Courtney, there was a scathing piece in the Wall Street Journal by the editorial board, and it said, if Republicans lose the 2 Georgia seats and their majority in the Senate, Republicans across the country should know to thank Trump for their 2021 tax increase. So higher taxes under a Biden administration, however you want to argue we get to that with what happens in the Senate next week with Georgia. I mean, how much do you think higher taxes are going to dent any progress the country can make in the new year?
It's definitely top of mind for a lot of investors. I know all of our clients are asking about that as well. Our tax is going to go up. Is there something you can do in your investments? And doing anything tax efficiently, like even before year end, we're doing things like maybe taking some money out of IRAs or maybe looking at things like municipal bonds. There's definitely ways you can play that, but I do kind of argue it's a little too soon to know if and when and how soon taxes are going to rise. But it's definitely top of mind. I think we'll probably continue to talk about this into the new year.
Yeah, so higher rates, higher taxes, and higher inflation. You know, Scott, home prices, according to Case-Shiller, they rose in October on an annual basis by the most since 2014. What's your take on the housing market's recovery, and if it might be a little bit too hot right now?
I'm jealous because my house in Metro Chicago didn't do that. And Lauren, you know, maybe folks in New York would feel that way too, and maybe even soon to be California, LA. Hello. So, look, I'm happy for some of those folks that have seen the appreciation because that's been pretty striking too. I mean, some of the housing appreciation in areas like Nashville, Kansas City, Dallas have been really good. And also, a couple of those states are no tax states too, as far as income tax on a state side. So that's probably one thing to do with it. And some of these areas like Chicago and New York are obviously quite different. So, yes, I think it's a good thing to talk about how well housing prices have done. For a lot of us, that's our biggest asset. But that, again, is a function, boys and girls, of low interest rates and a lot of capital being out there. So if rates get tighter, if they get higher, just watch for things to maybe cool off a little bit before they resurge once the economy reopens and fully gets going.
Scott, Courtney, thank you very much.